It wasn't the crash that ruined them. It was the silence. The silence of the ticker tapes after they stopped printing. The silence of the factories as the gates were chained. The silence of the bread lines, where a man's pride was worth less than a loaf of bread. In 1929, the world didn't end with a bang. It ended with a slow, grinding halt. Today, the music is still playing. The party is louder than ever. The screens are brighter. The numbers are higher. And the same silence is gathering just beneath the noise. You are not living after the crash. You are living in the final, frantic moments before it. You are living in 1928, and almost no one sees it. We are taught that the safeguards are in place, that 1929 can't happen again. This is a dangerous lie. It is happening again. But everyone is looking in the wrong place. They are waiting for a single day on a calendar, a Black Tuesday, a 20% drop in their stock market app. The Great Depression was not an event. It was the consequence. It was the final, inevitable chapter of a decade-long illusion. An illusion of easy money, blind optimism, and hidden fragile leverage. That illusion is a 5-stage formula, a recipe for ruin. Today we decode that formula. We will show you the 5 stages of the 1929 collapse and prove that we are not just rhyming with history, we are repeating it step for step. The formula begins with stage 1, the fuel. It's called easy money. The First World War was over. The 1920s began. It lowered interest rates. It made money cheap. Credit flowed like water. This cheap credit created a new kind of economy. It wasn't an economy of production. It was an economy of consumption. People borrowed to buy cars. They borrowed to buy radios. And then they borrowed to buy stocks. The entire nation felt rich, but it was a phantom wealth. The prosperity was not earned, it was loaned into existence. The economy wasn't growing, it was just inflating. It was a house built on a foundation of debt. Lesson: easy money is not prosperity, it is a tranquilizer. It numbs the system to risk and makes everyone believe they are a genius when they are just leveraged. And the historical rhyme is obvious. After the 2008 financial crisis, trillions of dollars printed from nothing, an everything bubble built on the same foundation of debt. Stage 1 is complete. This leads to stage 2, the fantasy. It's called the new era. The Roaring Twenties were a technological miracle. The automobile, the aeroplane, the radio change everything. Investors became convinced that these new technologies had permanently broken the old rules of value. They weren't buying companies, they were buying stories. The most popular stock was RCA. The stock's price detached from reality. It soared hundreds of %. It was priced for perfection, for a fantasy. When the fantasy cracked, RCA led the market all the way down. Lesson: this time is different are the 4 most expensive words in the English language. Human nature never changes. We will always chase a good story, even off the edge of a cliff. The historical rhyme is obvious. Artificial intelligence, electric vehicles, cryptocurrency. Companies with no profits were given valuations in the hundreds of billions purely on a story. Stage 2 is complete. This creates stage 3, the engine. This is mass leverage. How did ordinary people in the 1920s afford stocks? They borrowed, buying on margin. You only had to put 10% down.
You could borrow the other 90%. This meant the entire stock market became a giant inverted pyramid balanced on a tiny point of actual cash. This system guarantees annihilation on the way down. A small 10% drop was a margin call. When everyone is force sold at the same time, the market doesn't just fall, it evaporates. Lesson: leverage builds phantom wealth, but debt creates real-world ruin. The bigger the leverage, the more fragile the system. And the historical rhyme today: the leverage is infinitely larger. It's hidden in corporate debt derivatives, shadow banks, 30-year mortgages at peak prices. The pyramid is back. Stage 3 is complete. This brings us to Stage 4, the glitch. This is institutional failure. The stock ticket tapers an hour behind. You are ruined, but you don't even know it yet. The banks had been gambling with depositor money. They all failed together. The infrastructure of finance was revealed to be a fragile, inadequate lie. Lesson: the system's true strength is never tested during the party. It is only revealed in the fire. And it always fails. The historical rhyme is terrifying. Flash crashes, brokerages simply turned off the buy button. We see major banks like Credit Suisse vaporize over a weekend, servers that can and will be turned off. This is the final tragic act, Stage 5, the denial. President Hoover announced, "The fundamental business is on a sound and prosperous basis." John D. Rockefeller declared, "My son and I are buying sound common stocks." The market rallied, convincing everyone the worst was over. They bought the dip. This was the deadliest trap of all. The real collapse was a slow 2-year grind. The denial was just an echo. Lesson: the powerful will lie to protect confidence. They will tell you it's a soft landing all the way to the ground. Today's historical rhyme: inflation is transitory, the economy is strong, a soft landing is assured. It is the exact same script. Stage 5 is the world you are living in right now. The picture is now clear. The 5 stages are complete. The cheap fuel, the technological fantasy, the hidden leverage, the fragile system. The final official denial. The 1929 playbook is not coming, it is finished. All that is missing is the spark, the single margin call that cascades into a systemic failure, the silence that follows the party. But we have safeguards now. We have the FDIC. We have circuit breakers. This is the last illusion. These are not shields, they are delaying mechanisms. The FDIC has pennies for every dollar it protects. Its only solution: to print more money, thereby destroying the value. These safeguards are the problem. They are the mechanisms that allowed the bubble to grow this large by promising a safety net that does not exist. So, what did the survivors do? They had exited the system. They held the thing itself, not the promise of the thing. The first is hard assets, things that cannot be printed. Gold, silver, land, Bitcoin. They are insurance to keep you from becoming poor. Their value is their value. The second layer is hard skills. Your portfolio doesn't matter, but your function does. What can you do? Can you purify water? Can you grow food? Can you secure a perimeter? Hard assets without hard skills make you a target. Hard skills without hard assets make you a servant. The survivor of every collapse in history is the one who combines both. You are living in 1928. The party is loud, but the silence is gathering. History doesn't just rhyme, it warns. The answers are not in tomorrow's headlines, they are in the patterns of the past. I will continue to show you where to look. Subscribe, not for fear, but for foresight, because the pattern repeats. But what if the next collapse isn't financial? What if the easy money and denial aren't just in our banks, but in our culture? Next week, we expose the three-step formula that topples empires from within. The episode is called When the Center Cannot Hold.